One disclaimer, I'm going to be covering the history of Bitcoin and the pricing and also provide a trend analysis of what I am projecting what Bitcoin's going to do in the following year. Disclaimer, anything I say is not expert advice in how you should invest your money. You need to go to a qualified investor who is knowledgeable and certified in this. So whatever I'm telling you, take it for a grain of salt. So the screen you're seeing right now is has my source data. There's a Bitcoin historical data. This is where I'm going to be pulling all my pricing, closing price for the day, every day since day one of Bitcoin to November 22, I believe, of 2024. Currently, it is November 24. So before I do that, I'll give you a little history of Bitcoin here. So halving dates, these are important. The halving dates happen when a certain number of blockchain is created. I don't know the exact number, but um, Bitcoin started in roughly 2010, and the first halving uh, happened on November 28, 2012. A halving date occurs again when a number of Bitcoin blockchains is uh, created, and then it closes out that ledger or recording. Now, everybody's wondering what the big deal is with the energy that's being consumed. Well, likened to brick and mortar banks like Bank of America, Citibank, Chase, and a lot of credit unions as well, they record all the transactions that banking users need, whether it's a checking or debit card or savings and what they do in direct deposit. So it's all recorded there. In crypto, you have numerous computers around the whole world, millions of them, maybe billions of them, actually recording transactions, and they're actually copying each other. So every computer has a digital duplicate of what all these transactions are. The great thing with that is scams or anybody who wants to hack into a computer may hack into one computer, but you have millions of computers out there that are recording these transactions, and these computers are checking each other. They're they're checking and taking balances and making certain everything is corrected correctly recorded. So a hacker could go in and affect one computer, but the other ones are going to say no, that's not correct, and there's thousands of them, millions of them that have duplicate recordings. So these computers are using electricity, and that's why there's a call for it's not really an environmentally um, reasonable means of, uh, of this currency, this cryptocurrency. So going back to the first halving date, um, when a certain number of blockchains is solved or created, Bitcoin rewards the a anonymous user. They have to guess a number, and if they get it, my understanding, they get rewarded. So anything before November 28, 2012, they are awarded 50 Bitcoin. Well, 50 Bitcoin back then was very small, maybe pennies or 10 cents or a dollar. So the miner would get 50 Bitcoins, 50, let's say it was a dollar a Bitcoin, so you'd get $50. Post 2028 to July 9th, 2016, the halving happened here. So the reward went from 50 Bitcoins to 25. So people who solved or guessed the right number, the computers that guessed the right number were rewarded 25 Bitcoins, and that was during the period of November 28, 2012 to July 9th, 2016. Now, if you look here, the dates, the years, it looks like it's roughly 4 years. Actually, it's 3.8 years on average when a new halving date occurs. So when July 9th, 2016 happened, the the number of blockchains that were created was closed, and it went to another halving price, and it went from 25 bitcoins rewarded to 12 and a half. When May 11th happened, 2020, that's again close to 4 years. This is the third Bitcoin halving date, and it went from 12 and a half Bitcoins to half of that, which is six and a quarter. Now, again, all these computers are recording all the ledgers, the transactions, the buying, the selling, the transactions of Bitcoin, and then it's creating a blockchain, and every blockchain is recording all these transactions from every person in the world that's doing transactions with Bitcoin. Um, when 2024 came, it was already stated that April 19th was going to be the approximate date for the fourth Bitcoin halving date. So the award would be, instead of 12 and a half Bitcoins, it would drop to six and a quarter. So that was six and a quarter was being paid before April 19th, 2024. After April 19th, actually the actual halving date happened on April 22nd, 2024. The Bitcoin reward was 3.125. Now, keep in mind, the price of Bitcoin we're going to cover at this time is a lot larger. It was like 60,000. So 60,000 times three is like 18, $180,000. So this is the reward. So even though the number of Bitcoin rewarded has dropped in halves, the reward is much larger. Now that I've presented the halving dates, I'm going to go through and show you the actual data. Here's the data that I recorded from November 22 to 2024. It has the end date, has the opening price, the high price for the day, the low price, and the closing date, the volume traded, and market cap. And then I put here a halving column. This is where I recorded a flag where the halving is. Now, this 100,000 is just a flag marker for me. The actual price was 66,818 at this date for the closing. And then the next halving date, and that was, I have it here as April 22. And then the next halving date was back in May 10, 2020. Next halving date, July 9th, 2016. Next halving date was on November 28, 2012. And this was the price at the halving date. So I plotted this chart, and this is the chart here. The blue line is the halving date. So this is the first halving date, the second halving date, the third halving date. Now, what is the red line? The red line is the peaking price. This is when I was curious where the price of Bitcoin peaked after the halving date. So I marked them. You can't see this one because it's very small, but if I change the scale, so I'll change the scale to 1,000, or let's say 1,200, because I know that it was about 1,000. You see the peaking price here is about $1,151 on December 5th, 2013. So what I did is I took the difference from the peaking date to the halving date, and that was my delta D. That gives me an idea of when halving occurs, when the peaking price happened. I did the same thing for the next halving date, and I also plotted what day it was for the peaking price. So I'm going to change the scale here to 20,000. And the peaking price here was in December 17, 2017 at $19,427. The next halving date that occurs not at 4 years, but like 3.8 years was here. And the peaking price, I think this was around 70,000. So let me put 70,000 here. So that peaking price, the peaking price was looks like 67,500 at November 9th, 2021. So I took the delta Ds, the delta day, the day's difference between peaking to halving, peaking to halving, peaking to halving. Once I got that, I plotted those days. So this is the delta day. This is for the first halving to peaking, peaking minus halving, peaking minus halving, and then I put a fit curve here, and I asked it to provide me to add trend line to it, and let's do a logarithmic, see what that does. Now let's do a exponential, no, let's do a polynomial. Let's do powers, no, let's do this one. But I think this is it. So what I did was I put this chart, and you can actually put a chart equation, that equation here, and I use that equation to predict what the fourth delta D would be, meaning I don't know when it's going to peak. This is a projected number. It's telling me 559 days. So this is where I'm getting 559 here. So this table here shows the halving dates, and it shows the halving price, and then it also shows the peaking date where the price of Bitcoin peaked at its max value after the halving. And then I took the difference between this date and this date, and gives you 368 days, 526 days, 548 days. Well, this is not a line. You can see it's not clearly a line, but I did pull an equation of these three, and it gave me 559 as a projected future peaking date. And then I also did the percent gains on it. And this percent gain is also a trended one. So at the halving date of $66,744.30 on April the 22nd, this is projected to be 559 days, and the peaking price is going to be projected November 2, 2025. That's next year. And notice the days here are I don't want to say close, but they're giving you I'm looking at it as a trend. So I'm thinking that the Bitcoin price is going to climb to $300,000+ per coin. Now, one thing I do want to do is go back here to this chart, and the interesting thing about this, and everybody's going to think, well, there's a whole bunch of up and down pricing here, and this volatility scares people, because one day Bitcoin could lose $1,000, it could gain $5,000, but what does this volatility do? It generates emotional response to people in fear or in greed. So to eliminate this volatility, I'm going to change this chart to a logarithmic. And now watch what happens. This logarithmic chart, for those who don't understand, these are from here to here increments of of pennies. So right here is about 50 cents. That's $1. Okay, right here is about maybe 75 cents, and that's $1.25 is about right here. Now, the next step in the scale is in $10. So this is $5. This is $7.50, and this is $2.25. Now the next scale is in $100. So this is $50, $75, $25. The next scale is in thousands. So this is $500. This is $250, $750 here, 1,000. Now the next scale, and it's jumping by tens because this is log base 10. 10,000, this is $5,000, 7,500, and 2,025, or $2,050, $500. Well, notice anything beyond this next scale goes up to 100,000. Okay, and let me change the scale here, max. I'll make it 150. So the next scale is 100,000, and we're already here in the 90,000 range. We've actually peaked at a price of, let's see if it shows it, $92,119.47. So increments above this, if I change the scale to, well, it's at 150,000, increments here are going to be in terms of $10,000 increments in this next scale. So what's amazing to me is this line, this curve is so, it's telling you where it's going. And it's going to be up in this range right here next year. Notice it's already, I have plotted 2025 here. There's no data there. I'm only plotting up to November 22nd, 2024. So as I continue, I will be plotting this and updating, and this chart will continue to climb, and I project it to be right about here. Well, that is where the $300,000 mark is. This is why it's exciting to be part of this um, uh, ownership of crypto, because this chart is just so clear to me. I mean, my background's engineering. I do a lot with numbers, and having to plot this in this type of scale uh, is eye-opening. Anyway, that's what I wanted to show. What else is there? Oh, just to go back to my projection chart, imagine only buying back in November 28, 2012, how many Bitcoins could you have bought at $12.68? So let's say $12.68. Well, let's do this. Let's do, if someone bought $1,000 worth divided by $12.68, they would have bought 78 coins or 79 coins. Let's do 78. So at 78 coins for this first iteration, I'll put it over here. Um, so equals 78 times this price, peaking price. You would have made $77,000 with your $100,000 investment. So this is basically $1,000, not 100,000, $1,000 investment. You would have made $77,000. What about if you, let's do it for all of them. You would have made, if you still kept your 78 coins, you would have made $1.5 million in December 17, 2017. If you kept that 78 coins and on November 10, 2021, you would have made $5.3 million. If you kept your 78 coins, and if my number is projecting correctly, on November 2nd, I'll do plus or minus 30 days, you could be facing $24 million in terms of your valuation on your Bitcoin. Who is ready to retire at $24 million? I am. Not to say I would sell all of it. I would probably sell a portion and then continue riding this Bitcoin bull run. So that's what my analysis shows. Thank you for watching, and leave comments. I'm interested in hearing what you have. And here, these numbers here, this is the average days. I did the average of this. This is the average year. I just converted that to years. This is the peaking price versus halving date. It's the average is that, and it's that in years. I did more charts here, and these charts are just more correlations. You can look at it right there. But that's what I have. So I'm open to any kind of opinions, advice, comments. Thanks.